Hi, my name is Scott Gibson with Beneath the Surface. I'm here with John Kaiser of Kaiser Research. John, thanks for being with us.
It's great to be here, Scott.
I wanted to get a couple stats out from you, because there's a lot of people that quote you on these stats at the various conferences and presentations that I've been to in the last few months, really over the last year or so. You track a number of companies, I think it's close to 1,800 companies in the Junior Mining Index. How many are currently trading at less than 10 cents?
It's over 1,000 companies. It's just brutal. Of the 1,800 companies that I track, which are supposed to be in the resource sector, 57% are trading below 10 cents. And it's actually worse now than it was at the end of 2008. And what makes this really horrific is that this time our sector is isolated for this. At the end of 2008, the resource sector was roadkill in the path of a much bigger disaster. This time, the S&P's at record highs and everything's, real estate's rebounding, everything's doing wonderful, but the resource sector is in one of its worst bear markets. And I track the working capital of these companies, and there are 819 companies now that have less than 200,000 working capital. And as you know,
800 companies.
Yes, 819, and that keeps climbing with every quarter's new batch that goes up. And just amongst the TSX Venture juniors that I follow, amongst the ones trading below 20 cents and that have just negative working capital, they collectively owe $1.6 billion, 3/4 of which is for companies headquartered in British Columbia. There are accountants, lawyers, service providers, probably drilling contractors and that, who are going to have to take massive write-offs, because there is no way to raise the money. Nobody wants to give money to these companies anymore. And it's going to be okay with that many of these companies disappear. There's way too many useless pretend companies, lifestyle companies, as they say, where the management has no real idea of how to generate a prospect or execute an exploration program. All they do is siphon away the available investor capital to sustain the overhead and pretend exploration programs. There's about 700 companies that I think that still have more than 200 grand left, which are interesting companies, and those are the ones I'm focusing on. The stock exchange has been sort of mocking my statistics, saying, "Oh, you were predicting all these suspensions and delistings coming."
So you still think that's going to happen, and when?
Well, the thing is, this year, the accountants and all that extended the credit, yes, listen to the stock exchange story that it's all cyclical, we just need things to get better, and market to turn around, and everybody will get refunded and get paid back. There's a problem, though, with the juniors right now. An accountant who audits a financials can't sign off on them if he or she is a creditor. So the juniors are going to have to come up with cash to pay off all these accrued debts, and I think there's going to be a lot of upfront requirements for doing the audits, and the big period is March and April next year, when about 2/3 of the year end, either the November or the December year ends, come due. That's when they have to be filed. So I think in Q2 of next year, this is where you're going to see companies management just abandon these companies, and they're going to start suspending them. And the stock exchange, it can waive its fees and do that, but the overhead of running a company is now so high, and the prospect of getting an aftermarket for your stock, and the way the stock exchange and the banking establishment have rigged the game to actually almost have a genocide war on the juniors, the public doesn't want to come in. I mean, somebody gave me an example yesterday of how they experienced computerized front running on an order. They apparently even allow the way they do in the United States, brokerage firms to insert order sniffers, so that when they can see your sell hitting the bid, they can actually insert their order in front of you and crush that bid. And as this gets out there, the public's just going to say, we want no part of that. And it's happening in America too. People are appalled by what these markets have become. So it's tough. But you know, nothing like a good discovery hole or something on a junior to get those ones going. But I think when we do get some sort of turnaround, it's only going to be the quality stocks. The junk is going to stay stranded at the dock. It's not going to rise with any tide.
And I want to talk about a few of those quality stocks here shortly, but first I wanted to ask the question of really if, 800 companies are trading at less than 10 cents, and the exchange doesn't allow financing at less than 5 cents, and there's $1.6 billion in debt across these companies. How is it even possible for them to do financing? So you see rollbacks happening already, but I think that's going to accelerate too.
And that they're also introducing a rule which in certain jurisdictions, and I think unfortunately British Columbia is one of them where most of the companies are headquartered, you will be able to do a rollback without even asking for shareholder approval. So you will one day get a news release saying this 5-cent company that you've been accumulating has just gone 10 for 1 at 50 cents, and of course what's going to happen, it's going to go right back to 10 cents, and then they'll do some financing to paper themselves up, and so we'll end up with this sea of shells and marginalized minority shareholders, and the guys who are still sticking here bottom fishing now, they're just going to walk away in disgust and say, you can have these rig jobs and shove them you know where, because I'm not playing this game anymore.
That's exactly what I think is coming over the next 6 months or so. Now, on the other side of the coin, the companies with more than $200,000, the good companies, can you mention a few of the ones that you like in the gold space or otherwise?
Well, I'm kind of bearish in the near term, next year or so, for seeing better metal prices. In particular in the base metals, I think that the slowdown in the global economy, plus mine supply coming on stream in areas like copper, and that is going to keep the metal prices from creating that sort of uptrend that gets everybody excited. And gold, well, you know, we need a trigger event like China coming out and saying, we actually own 2 times as much gold as we last reported 4 years ago. What do you guys think of that? You know, something like that happens, gold will jump back to 1,500. But I'm not placing any bets on that expectation. I'm looking for companies where the story has an intriguing aspect where it can flourish whether or not metals do anything. If they just go sideways, it won't hurt the company. They need to succeed on the fundamentals. So one company that I've been quite enthusiastic about is Probe Mines. And several years ago, they found one of these 5 million ounce, 1 gram per ton deposits, which was really wonderful when gold was $1,700. But at $1,300, that's not so wonderful. But what they did is they continued to explore this system. They encountered a different style of mineralization with a 10 times higher grade than what they had been focused on before. So they now have a discovery within a discovery, and I can back of the napkin see about 1 million 5 gram to 10 gram ounces starting to take shape, but they have barely finished following the zone because it extends under a lake, so they have to wait for winter drilling. So here's a story where they got the 5 million low-grade ounces there as an open pitable resource that if gold takes off, well, those become very valuable again. But they have a new story emerging where they have a high-grade underground mineable resource which could be very valuable in itself. And if it turns out to be something like a Timmins camp or Red Lake camp in an area where this isn't supposed to be, and they've got all this other ground, who knows what kind of exploration potential. So there's a company that right now the market doesn't care what gold's doing. I mean, it can probably go to $1,000. It's not going to bother this type of company.
And full disclosure, I don't own that stock. Do you own that, or is that?
I don't own it, but it is one of my strong recommendations.
And what other companies do you like out there?
I like companies that are generating targets in new ways, that they're able to look at existing geology that may have been looked at in the past, but they're using new technology. And 2 that I like and that I also personally own are Nevada Exploration Inc., which uses hydrogeochemistry to look for gold and Carlin Pathfinder elements in groundwater in the basin, in the gravel-covered parts of Nevada, where it's very difficult to do any exploration. The other is Uravan Minerals, which has been using a geochemical surface sampling technique where they take tree cores and clay samples, and they're looking for very subtle, obscure elements like lead isotopes, which are the decay byproduct of uranium. And the big thing in the Athabasca Basin, where we've got a fabulous discovery at South Patterson Lake, is those unconformity style deposits are very rich, very high rock value. Uranium is in not good shape right now because we got the Fukushima thing still dragging on. We got the potential for the utilities that are not going to be in nuclear energy anymore, getting rid of their stockpiles in the spot market over the next few years. So I don't think we're going to see a lot of help from the uranium price. But nuclear reactors are still being built. Nuclear energy is not going to go away, and the need for future supply of uranium coming from high-grade deposits is still going to be there. So we have an exploration type situation. This is again on this theme of we don't care what the commodity price is doing. But the problem with the Athabasca Basin is as you go deeper into the basement, the deposits are all at the unconformity between the basement and the sandstone cover that has filled it. And once you get beyond 450 meters, the conventional geophysical tool, which is a EM survey that looks for graphite, the conductor with which these deposits are always associated with, the anomaly starts getting big and fuzzy, and of course as you get deeper, the cost of drilling these targets goes way up. And also as you get deeper, you don't get any geochemical footprint at the surface to help you home in on which conductors of the thousands there is the one likely associated with a uranium deposit. So this company's developed this technology to go and sample these large areas and wander deeper into the basin where it gets down to 1,500 meters, and there are super elephants inside the basin because the stuff on the margins is good, but the way to get really big uranium deposits is the thicker the sandstone cover from which the uranium is harvested by the hydrothermal cells, the more concentration potential you have at the unconformity. These are small but very rich deposits. So this company could revolutionize the way we look at the Athabasca Basin, and it trades at 5-7 cents. There's only 40 million shares out. Management owns 25-35% of the stock. It's like they still have $1 million left too. They got 2 farm outs to Cameco. I mean, this market is so bad. I mean, I'm sitting there, oh, this is great. This is a great story.
Is there another one out there that you like? There's so many companies, sort of like you're saying, that are seemingly undervalued, but you got to be very selective in which ones you're choosing to get involved with, especially if you're thinking that metal prices are going to be trading at a range. But what else do you like?
Well, one metal that I think is going to move sooner than all the others is zinc, and that's been a very unpopular metal. And there's a company, Lithic Resources, which I also own, and which is also a recommendation, and they have the West Desert deposit in Utah, which is amongst the more mine-friendly states in the United States. And they have a potentially open pitable resource, oxide material, and the more likely to be mined underground sulfide resource. It's not a world-class deposit. It has some expansion potential, but it's the kind of project that could be put into production a lot quicker than something like Howard's Pass. And there are zinc mines depleting, shutting down in the next few years, and there's nothing in the hopper. And China, of course, has been beating up the zinc market. It's expanded its supply 30-40% in the last 5-6 years, but China itself is consolidating its mining industry. It's cutting back on all these polluting mom and pop type operations, and we may see a zinc decline happen from China where nobody expects it. We can see the decline in Australia and Canada where big mines are shutting down, and at the same time we may see consumption of zinc rise from places like China shifting into a more consumer-oriented economy. So a project like this, again, trading 5-7 cents with only about 50-60 million shares out, it's ready to go, and it attracted 2 CEOs from 2 successful buyouts. One Andean Resources and the other Cumberland, one $3.6 billion, the other $900 million, attracted them as directors. So management has beefed itself up. It's got a Boston-based hedge fund in there as a shareholder, and I think they're redoing their PEA. This is the other thing. This bear market makes everybody creative. They published a bad PEA about 2 years ago, and then the stock tanked, and they even used $1.10 zinc, even though it's like 85 cents right now. But they've gone in there and it's a magnetite-rich system, and they said, we've been treating this as a waste that we have to put into the tailings pond and all that, and of course that's a cost. We think we can turn this into a saleable product. So they're turning one of the waste byproducts into a payable byproduct, and that's what we're waiting to see in December, what the PEA is going to say about that. And probably still be negative at 85 cent zinc, but 85 cent zinc is unsustainable if global economy grows and these other mines shut down and nothing else comes on stream.
Well, it's three very interesting stories. Full disclosure, I don't own any of the three, but a gold, uranium, and a zinc story to follow and for our viewers to look into. Thanks very much for being with us, John.
Thank you, Scott.
Appreciate your time. Again, that's John Kaiser with Kaiser Research. My name is Scott Gibson with Beneath the Surface. Thanks for being with us.